Good evening, everybody. Happy 4th of July. I'm just doing a quick mid-week update on our positions because we've had a lot of market movement, a lot of very bullish market movement. And I've had some other issues with my website. We had a virus on the website which kind of pulled my attention off of posting for a little bit. And you guys with SMB Option Tribe, they had some technical difficulties with their site as well. So I hopefully have all that stuff straightened out now. And anyway, this is where we're sitting at here on the 4th of July. This is the August bearish butterfly. If you remember right when we entered this thing, let's see, what day did we enter this? I think we entered it on the 22nd, which would have been right here. We were talking that maybe not the best conditions to enter it. It was just after a very big down day, and we may have wanted to see how certain things resolve themselves. But either way, we got in it as per guidelines, and we're going to run it. One of the things, also we paid $11 for butterfly, a little bit more than normal, and our delta was a little high going in, a little bit higher than normal. That's kind of telling us that the markets are skewed to the upside, or the major participants in the markets, they don't really have a whole lot of fear of the market going down. And excuse the fireworks in the background, it is the 4th of July. So anyway, that's kind of what it's telling us. So we know it was a little bit of a strange entry. That said, we went in there and we decided to play it. Alright, so let's go to the analyze screen. Basically what happened here, we started in at 750. We came in here and added a 770. We had a delta theta ratio problem. Again, having a delta theta ratio problem 45 days from expiration is very unusual. It's telling you the market is skewed to the upside. And again, there's not much fear of the market coming down. And butterfly pricing tends to not be in our favor under these conditions. So if you had some other skills, some of the skill sets with your trading, you may have been able to pick that up. You may have been able to take some action to compensate for the excessive market skew. Such as a vertical spread or some kind of a deep in the money call, just to compensate that off a little bit. But by the bearish butterfly guidelines do not include that. So we move on. We have our delta theta ratio problem. We go ahead and do our roll for delta theta, and then we had another continued up move in the marketplace, which caused us to add an 810 in. So here we sit. We're down about 2/3 to our maximum loss. If the market decides it wants to settle a little bit, we will probably exceed our delta theta ratio. We'll probably have to pull the 770 off. If the market pulls back, then we are perfectly fine. You'll notice if the market does settle or pull back, a lot of value is going to come into these butterflies really quickly, and this position gets back to break even really fast. So, am I overly concerned about this? No. Am I aware that I max loss out with another 12 or 14 points? Yes. But I'm not going to be overly concerned about that, because the reality of the situation is we are due for a roll at 820 anyway, I believe. Hold on, we have a reference of 750, an add of 790, an add of 810. Yeah, we have another roll point at 820. If I roll this, we'd probably be good till, as long as the market doesn't go up too quickly, we'll probably be good to 840 or so. If the market even decides to settle even for a day or two, this position would probably be okay till 850. Looking at my charts, I don't think we're going much higher than that. So I think we'd be able to deal with a move like that as long as it's not, as long as it slows down a little bit and it's not terribly aggressive. We should be able to deal with that. But anyway, this position looks okay. I don't like being down 2/3 max loss, but that's, again, it's not called a bearish butterfly for nothing. And we have had, pretty much since we've been in, nothing but up movement. So if we go to June 21, that's this day here. We had we had one day that was down like $1. 3, 4, 5. We've had nothing, nothing but basically a vertical up move here. And on a bearishly biased position, it's a little tough. So, but like I said, looks fine. And let's take a look at our July. Okay, so here is our July bearish butterfly. This one, right now, this is down 516. It's got a $1,500 maximum loss. This is a position, again, that we should have been out of prior to 21 days to expiration. We were coming into 21 days to expiration. It was up, let's see, I think to 2/3 its profit target. And, realistically, if you're a couple days from when you cut your profit target down, it's a good idea to just close the position with any sign of an issue. We didn't do that. We decided to hang in here to make things interesting. And they have been interesting. We had a nice big up move later in the position. The delta theta guidelines have been working fairly well for us. We're down a little bit of money, but nothing to be too concerned about. Again, this position will max loss out with another hard up move if we don't catch it. But we'll see how it goes. It's also pretty high in theta. It's going to start really kicking up shortly. So again, this settles, it'll be up money. We're just trying to get up $500. If we get my guess is if we get 2 days and the market backs down to 810 level, then we will be able to close this out at our reduced profit target. Of course, if the market really shoots up hard to 850, we're probably going to be gone. There are M3 type of adjustments that we could do here to help offset the upside, but we're not going to do that. We're just going to go straight by the guidelines and see how it goes. And last but not least is our M3 trade for July. Here's what this position looks like. It's down. If you remember right, this had a profit target of 3,500, a maximum loss of 3,500, and the position is down about almost $600. And realistically, it looks fine. We did take some punishment because of again, when the market makers start skewing the market and we start getting these hard up moves, your butterflies tend to lose more than what your T+0 line is going to indicate for you. So you kind of need to be aware that, hey, the market's getting overpriced in the butterflies. When we were pulled down into these butterflies and I was looking at the value of these, the value of those were awful high. So I came in here and started buying calls to put myself a little bit more positive delta than normal, because the butterflies were worth more than normal, and I knew if the market took off, it'd be a problem for us. And boy, did the market take off. It really took off. So I was able to hedge most of that so that we're only down $600. And like I said, the position looks fine. Realistically, if we back down into this range at a fairly regular pace, then this would probably be up around $1,500 or so, because the money's going to come back into these butterflies. Alright, so how did I get to this position? Last time I did an update, we were, let's see, I think we were here. Here? No, not there. We were here. Last time we updated, we were here, which was on, let's see, over the weekend, which would have been this day. The market was around 800. So the market was around here, and I think we were pretty much flat, maybe even a little bit negative theta. I think we were positive vega, but I was willing to hold that position over the weekend, and I did. And of course, we got the continued up move. So on Monday, I just let the position go, which was this move here. I just let it go. Then with the continued up move on Tuesday, I was very negative theta, very positive delta. I came in here, and this is just gradual adjustments, but what I did here is I sold off the 750s here and here, and I purchased some 770s. I sold off all 750s. I only bought back 6. That's 5. That's 6 770s. because I had to pay so much money for them. I had to cut my butterfly call ratio down, and I have a planned capital of 35,000, so I was getting up there in capital. So to deal with that, I cut out one of the butterflies. I had to add a couple more verticals here because my delta was still higher than I'd like, and it puts me in this position here. We closed out slightly positive Vega, slightly positive Theta. Again, very similar to what we did on Friday. If the market continues up, we will continue to follow this. Next roll up is probably going to be looking at somewhere around, if the market gets much over 830, 835, we're going to take these to 790. We'll probably have to cut the butterfly size down again. From 790, I'm going to think really hard before we go any higher than that. We have the charts coming into this major resistance. We should be very overextended by the time we get there. If it goes all the way to 850, for example, then I'd expect it to pull back down into this range here. So if that happens, we'd be very well positioned at the 790s. So that's that's kind of my plan, is go to the 790s, and I'm going to resist rolling them any higher. If we do happen to get over 840, let's see, if I go to 790, my short's going to be 840. If we happen to touch 850, I might, and I can get the price to come down out of the 800s or the 810s, I may go to 800 or 810. But more than likely only 790 on an up move. And on a down move, of course, that's going to be good for us. If we have a harsh down move, okay, we're fairly close to expiration. We do not want to play with this downside. I do not want to play with this downside. So if we get a regular or a somewhat organized pullback and I can gradually deal with this downside, then that's great. If we decide, if we come in here and get a very hard pullback, if we start getting an aggressive pullback down past the 790 area, this trade is going to be exited at whatever is in it, whether it's a small profit, a small loss. The trade will be exited at that point. I am not going to play with this into expiration if the market wants to crash. I can tell you the last time that we've had butterfly pricing this way, skewed this hard, what that's telling you is there's a lot of confidence the market's going up. There's no fear in the market. And I realize VIX is slightly elevated, but the market prices are just telling me there is absolutely no fear, and everybody is very complacent. So that being the case, if we get some bad news or something, if something goes wrong, the market's going to come down very, very hard, because now everybody's going to freak out, volatility is going to spike, and the market will have a hard down move. So, and I'm not talking a normal down move, where we might come in, because it would be perfectly normal for us to pull back to 800, maybe 790, and then bounce. But if we start getting these, start breaking these levels in here, then people start to get scared. And we may be looking at a retest to 730. So I don't want to be involved with that. We get a hard down move, my odds are no longer in my favor, and I just don't want to play the game anymore. I will play this game in August without a problem, but I don't want to play it in July if we're going to have a market crash. So that's where we are. That's where we stand. If we go up, I continue to chase it. We stay here. I'm going to hit a couple more verticals, wait for it to settle back in. And if it settles back in, that's great. We'll take our profit. We start coming down hard. We are out of the trade. So I think that's it. So that's a little quick mid-week update. Have a great rest of the week. I hope you had a great 4th of July. And we'll see you at the next market update. Good night.